Welcome to Introduce Investor Days. My name is Stefan Bilov, and I'm an equity research analyst here at ABG. And with us here today, we have Cibus Nordic Real Estate, and I'm very happy to hand over the word to the CEO and CFO of Cibus.
Thank you. Thank you very much. Yes, today's presenter is, apart from myself, Sverker, Källgården, the CEO of the company, Pia-Lena Olofsson, who is the company CFO. I won't take you through all the numbers in this summary, as Pia-Lena will go into those more in detail. But we have had some significant events during this period. At the annual general meeting, we elected a new board member in Stefan Gattberg. We have also recruited Peter Löfgren as the new CIO of Sweden. And despite the corona pandemic, we have continued to acquire new properties. We have acquired 23 properties in 2 different transactions. First, we bought 18 properties in Finland, and then also 5 properties in Finland after that. And on the financial side, we issued a new green senior unsecured bond of 600 million SEK in June, and just after that we announced a voluntary redemption offer for our outstanding 135 million euro bond. And the days after that we issued a new bond of the same amount, 135 million euros, and we redeemed the existing bond. So we are now fully refinanced. And then, just before the Q2 report was released, we announced that we are going to hold an extraordinary general meeting next Monday, on the 14th of September, to vote on the board's proposal to go into monthly dividend. A couple of slides of what Cibus is. Cibus is a daily goods properties company with strong tenants that provide dependable income to our shareholders. We are focused on real estate or the grocery stores or daily goods stores of supermarket size, as we think they are the most resilient store size, and we'll come back to that later on. We fill the properties with the best-in-class grocery chains, leading grocery chains in the Nordics. And the story about Cibus is more or less the story about portfolio diversification, because traditionally these kind of assets were owned as either single assets or in small portfolios, so maybe 2 to 5 assets, which meant that there was a very high risk concentration. You came into a weak negotiation position with the tenants, because if the tenants left, you lost all your cash flow. The banks realized this, so it was hard to get bankability, which meant it was a high risk and high return business. What Cibus realized is that if you own 280 of these properties, you diversify the risk and you lower the concentration. None of the assets now is worth more than 2.5% of our NOI. And as you own a lot of properties, you become an active cooperator with the tenants, not just a landlord negotiating rents. The banks realized this, so the bankability is much higher, which means that you lower the risk, but you have the same return as for single assets. And as we are a real estate company within retail, it would be stupid not to talk about e-commerce. And the Swedish Institute of Trade has produced a report on the effects of different types of retail when Amazon now enters Scandinavia or Sweden. And as you see to the right of the scale, with a high effect are electronics, books and toys. But on the other hand, on the far left side are daily goods, which is, of course, because that the Amazon are not focused on daily goods, as the margins are too low and the costs of handling, packaging and distributing the goods out to the consumers are too high. And to prove it, we can see that we have a resilience towards e-commerce. We see a negligible negative effect of e-commerce. During the corona pandemic, the percentage of online trades has risen up to approximately 4% in Scandinavia. But a large share of that volume is click and collect, which is collected from our stores. And you can see there are very few operators worldwide who make a profit on online food sales. On the other hand, we see a notable positive effect of e-commerce, as our stores are a natural distribution network pickup points for other goods purchased online. This is a very, very strong trend all over Scandinavia, as the Swedes and the Finns are fed up sitting at home waiting for DHL or PostNord to eventually turn up with the goods purchased online, so they have them delivered to a pickup point, and all our stores are pickup points. What about the effect, corona effect on Cibus business? Well, we have a business model that is non-cyclical. It should work whatever economy we're in, and the corona pandemic has really proven the business model, as we have seen a very limited negative effect. The grocery sales are on record levels. The tenants have handled the increased demand very professionally, and approximately 90% of our incomes come from these leading food chains. And more than 99% of our invoiced rents for Q2 have been paid. But of course, we have some additional small tenants. It might be a restaurant or a pub or a hairdresser that is connected to the food store. And for example, in Finland, the government closed down all restaurants and pubs. So we have helped them with around 200,000 euros during the second quarter. But bear in mind that all rents for that quarter were over 16 million euros. So it's a very limited effect. What we are doing that stands out a bit in this segment is that we are building a proper real estate company. A lot of the other companies who are present in our segment are institutional money and funds without an own organization. But as we have now hired Peter as the CIO of Sweden, we are now fully staffed, and we have staff working with our properties, our tenants, and with the financial market 5 days a week. So it's very easy to get hold of a Cibus employee. And it means also that we can actively work with both the tenants, the properties, and with new acquisitions. Talking about sustainability, which is a very important thing to focus on if you're in the real estate business, because of the huge impact on the environment from real estate. And we are driven by the conviction that we can contribute to a responsible, social, and environmentally friendly neighborhood where our property is situated. But how can we work with this? Because we have a lot of our portfolio is under triple net leases, which means that the tenants takes care of all the refurbishment or capex in the buildings. But what we do to work with sustainability is to work together with the tenants. The best thing we can do is to continue to buy properties with the best-in-class grocery chains in the Nordics, because they are extremely good working with sustainability and having a sustainable store. And one example of how we work together with the tenants is the picture on this slide, where Tokmanni asked us if they could use our roofs to put solar panel plants on top of them to reduce the electricity consumption from the store, which we of course said it was okay. And now they have generated about 260 tons of carbon dioxide, and that's the electricity consumption for about 920 apartments. And as I said, we have to strengthen the living local community. We have also supported these additional small tenants with 200,000 euros during the second quarter to enable them to reopen again when the economy is back. And we are also proud to have issued our first green bond to finance our energy efficient buildings. If we look at the shareholders list of the last of June in 2020, the 15 largest shareholders owns approximately 45% of the company. There is no distinct head owner. We have a very good shareholders list that we are extremely proud of. The fourth AP fund is the largest shareholder, followed by Marianne Dragicevic, Länsförsäkringar Fonder, and BMO Global Asset Management. And how has the share performed? Well, since the IPO, there is a very good volume, an average daily volume of around 27 million SEK, with about 1,200 transactions a day. And although our operational result was negligible, impacted by the coronavirus, the share price was affected. But as if you look at the trading price today, it's over 160 SEK, so we are well back on track. Then over to Pia-Lena for the financials. Oh, yeah.
Thank you, Sverker. I will just go through some key figures for the second quarter. So rent income grew with 30% to 16.4 million euros. Net operating income grew with 32% to 15.1 million euros. Profit from property management was 7.8 million euros, and earnings after tax was 8.9 million euros, or 0.24 euros per share. But we do have some items that are affecting comparability in the quarter. We have higher administration cost due to the 2 new bonds that we have issued, but also the final cost for the restructuring that we have done in the Finnish group. Net financial items are affected by redemption premiums. We have redempted the old bond, 114 million of the 135 was redeemed during the quarter, and 21 million euros is redeemed the 9th of July. So that had an extraordinary cost of minus 2.9 million euros. And then we have a positive exchange rate difference of 1.4 million euros. Looking at unrealized changes in value on investment properties, it was 3 million euros for the quarter this year and 5 million euros the same quarter last year. This is our current earnings capacity. We have acquired properties in July, so that's why we are disclosing the earnings capacity from July. As you can see, net operating income on a 12-month basis now is 65.1 million euros, and profit from property management 40.8 million euros, or 1.09 euro per share. Here's a snapshot of our portfolio at the end of the second quarter. We had 275 properties at a value of 1,124 million euros, and we had 664,000 square meters. Our anchor tenants are Kesko, Tokmanni, Coop, and S Group, and they stand for about 90% of our net operating income. We are now disclosing our figures in our 2 segments, Finland and Sweden. If you look at the net operating income, Finland stood for 89% and Sweden 11% for the first half year. But then bear in mind that we acquired the Swedish portfolio in March this year. If you look at the property value, Finland stands for 84% and Sweden 16%. Cibus' strategy is to give our shareholders stable and reliable dividend that increase over time. Our dividend policy says that we should increase our dividend with 5% per year. And the board has proposed that the dividend increases with more than 5% this coming 12 months after the annual general meeting that we had in April. So in total, 0.89 euros per share. They also intend that we should go to monthly dividend. We have called for an extra general meeting now the 14th of September, where the meeting will decide on the remaining 0.67 euros per share. Looking at our balance sheet, as I said, we have property value of 1,124 million euros. We have 4 bank loans, in total 551 million euros, giving a loan to value of 49% on senior secured debt. And then we have 2 bonds on the market, and also we had 21 million that was redeemed in the 9th of July. That gives a net loan to value of 60.5%. Our EPRA NRV was 439 million euros, or 11.8 euros per share. Our average remaining lease time is 5.5 years, and it's been quite stable at 5.5 years. And this is due to that we renew our leases on a continuous basis and also acquire new properties with usually longer lease time. Looking at our financing, as I said, we have 4 bank loans of 551 million euros. With an average floating interest margin of 1.7% over Euribor or STIBOR, depending on currency. Our average tenor is 3.3 years, and 67% of our bank loans are hedged with interest rates derivatives. And we have only long-term financing. Our first loan that matures is in 2.6 years. And we then have 2 new bonds on the market. 1 SEK bond that matures the 12th of June 2023, and the new Euro bond that matures the 18th of September 2023. And then we had 21 million euros that was redeemed the 9th of July. Over to you, Sverker.
Yes, thank you. What about the future? What we are focusing on now? The focus areas going forward is to continue to build a professional, transparent, and accessible company and organization. We have started work with a list change to Nasdaq Stockholm's main list. We are monitoring the other geographies in the Nordics, but focus now is on continued growth in Finland and in Sweden. Of course, we like to be more effective and increase the return from the existing portfolio. And last but not least, what are the primary reasons to invest in the Cibus share? Well, we produce a high and stable yield. Since the listing, it's been around 7%. There is a potential for favorable value growth. Due to the risk factor I talked about earlier of owning 1 or 2 of these properties, there is a fact that we can always buy single assets or small portfolios to 50 to 100 basis point higher yield than our portfolio is trading at. And we have an investment plan of around 50 million euros annually. We are present in a segment with a long-term resilience and stability, which the corona pandemic has proven. And last but not least, we pay out quarterly dividends that will increase gradually, and we have a plan for monthly dividend. Thank you.
All right. Thank you very much for this presentation. Now we move on to the Q&A session. And I would like to start off with a strategic question. So from a strategic point of view, you have been focusing on grocery retail assets or daily goods retail assets in Sweden and Finland.
Yeah.
And will you always continue to focus on this asset, or are you interested in adjacent assets such as warehouses or logistics for grocery?
We have a very clear and simple business model where we focus on the supermarket-sized stores because we think they are the most resilient. And it's very important for us that our shareholders recognize the company and the transactions we do. So we will stick to that strategy, yes.
Yeah. And you mentioned in the annual report and here in the presentation that you benefit from e-commerce, and you elaborate a bit on it here. And if I understand you correctly, the main benefit you have from e-commerce is that your daily goods stores can become distributors. Would you conclude with that it's the main benefit, or is there any other benefits that you would like to highlight?
Well, there are really two benefits. The first one is that we are a pickup point, but the other one is click and collect. As a large percentage of the e-commerce groceries are clicked and collect. That it's purchased online but collected at the store. And for our stores, if the volume comes from e-commerce or from physical shopping, it really doesn't matter, because the store benefits from the e-commerce as well. And you always know that when the customer comes there to pick up the grocery bag, they always remember that they've forgotten something to buy. So they'll take a stroll into the store as well. So there are benefits.
And looking at the ownership structure of these kind of assets, if you look at proportion-wise, how much is owned by private real estate companies and how much is owned by the grocery companies themselves?
I'd say it's very difficult to give an exact figure on it, but a lot of these properties are still owned as they used to be traditionally. So there are a lot of small portfolios out there in the Nordics. And we own 280 out of maybe, I don't know, 20,000 stores in the Nordics, so there are plenty more to buy.
All right.
Yeah.
And do you see a risk that your existing tenants would like to prefer their own assets, or?
The trend is not that. Well, there are some companies that Ica or Kesko have joint ventures together with Alekta and Ilmarinen in Finland, but that was just a placement for when Kesko and Ica wanted to reduce their balance sheet. So they are there, but they're not very active in the market.
And if we look at the existing tenant base, how many tend to renew their lease, and do you typically do any changes when you renew the lease?
It's a different situation in Sweden than in Finland, because in Finland has the world's most landlord-friendly legislation in the world, because the tenants have no rights. There are no possession rights in Finland. So the leases tends to be very long. So a typical lease in Finland is first a 10-year lease, and then they have 3 5-year prolonging options. So in practice, the contract is 25 years.
Okay.
But we can only include in the vault the existing of the first or the original contract or the option period where they're in. In Sweden, the vaults tend to go a bit shorter as they have possession rights. So a typical store in Sweden would be somewhere between 0 and 3 years of average remaining lease time, apart from our model or our portfolio. When we negotiated 10-year new triple net leases with Coop, we took the Finnish model into Sweden.
Yeah. And one final question about the transaction market. What do you think will happen with yields the coming 12 months, and do you have any typical competitor when you're looking for acquiring an object?
The yields on these kind of properties has been stable for the last 10 years, and that's because the valuation of these properties has also been stable. Because a lot of these, or most of these assets have fixed rents with just the index upgrade calculation. So you don't get the big fluctuations as you have in office rents or other retail if you have turnover-based rents. So the yields have been very stable, which also is a fact for the transaction yields. So, and I haven't got any indications of that it would be a significant yield pressure or anything. So we think it's going to be like this for the coming future. And during this pandemic, we haven't seen any bank-forced sales or anything. So it's more or less business as usual.
All right. Thank you very much.
Thank you.
Thank you.